It's Jam Capital, back with the market update. It's March 31st, 2026, and we're clearly after the close. In this short video, Jam Capital is going to give out, first, they're going to give out their preferred Elliott Wave count on the S&P 500 E-mini futures. Jam Capital is also going to present their alternative count to the S&P 500 E-mini futures. Among that, two other charts that you're going to have to watch and see. But first, past performance is no guarantee of future results. There's no guarantee of future performance. All investments involve risk, including risk of loss. And finally, this is just purely education. All right. Jam Capital's preferred Elliott Wave S&P 500 E-mini future count. As we can tell, we have a 4-wave progress. Blue being our main count. I'm bilingual. 1, 2, 3. This is no extension. No extension in the 3. We have an A, a B, and a C of 4. And this is what's unique is in the B wave it's a diagonal, and in the C wave is also a diagonal, which is very, very uncommon. Here we have our bottoming of 4, and we have our preferred resistance level of 7,700, or to the layman's, 7,700. Now, Jam Capital is going to present its alternative count. Here in this alternative count, instead of this being an ABC in the blue 4 right here, what we have now is a completed 5-wave sequence. 5-wave sequence, we have a full larger trend. Now we have a diagonal down, which is now going to be represented by an A, which is a corrective wave, meaning there's been an exhaustion from the April 7th, 2025 lows to right here. I believe this is January 28th. I'm not sure. 27th. I don't know. Honestly, I don't care. So once this A has been established, our next projected resistance level is going to be anywhere from 7,100 to 7,500. Granted, that's a very, very large range, and I understand, but within this range, we also have support at its C level, which is 6,100. And what's interesting is the trading range I gave you between 7,500 and 7,100 seems like it would not coincide with the 6,100 support level, but unfortunately, going from 7,500 to 7,100, there are key Fibonacci cluster ratios right at 6,100. So this is what we're going to look at. We're expecting a range. We're expecting price to move up here realistically within the next few months. And then in this count, we have it coming back down to this support level, also a midline. And what's interesting is this parallel trend channel, this represents the highs and the beginning of January 2022. And we have a trend line up here, and then the bottom trend line is represented on the lows of October 14th, 2022. So what this does, it gives us it gives us a range of possibilities where price can go, and quite frankly, it gives the illusion that we are in a overall larger degree, larger trend diagonal, whether it's an ending or leading. And here's what I'm showing you now is a near-term resistance and support. So typically what we're going to see here is we have this diagonal, and we obviously see this smaller parallel trend line. So if we look at the midline right here, I have this as a possible support, meaning the 6,600, we can see it move down to 6,500, 6,400. You know, this initial surge in price has caused an exhaustion, in my opinion. and we're going to see relief of support back down 65, 64, whatever it may be. The most key thing is once this top support line is broken, which could be anywhere from 6,800 to 6,600, once this is broken, it leads a pathway up to 7,000, 7,500. That's the key. The key, what we're going to be looking for is what it does off of this midline resistance. Is price going to come back down to 64? Or are we going to see is it just going to disregard what I say and just go right through it? We have so much enthusiasm and optimism in the markets right now. It's truly amazing how the narratives has flipped. Doom and gloom. A few words are said through the media and the news, and bada boom, we're up 3%. So finally, I want to give you one last chart. This chart right here is our oh shit, what's happening chart. This is, we see price levels go to 6,800 and then we see a drop down to 5,400. How does that happen? Something occurs within the global markets, geopolitical waves. The Iranian war is prolonging longer than the timelines of the president or the Secretary of Defense. Shit has hit the fan. Price of oil is skyrocketing. It's a food for thought. Finally, Jam Capital's going to leave you with this. I really don't know what the fuck I'm doing.